Hello, and welcome back to my channel. Today, we're going to take a look at Polygon, Matic news and price prediction. Disclaimer, this video does not encourage you to buy any of the cryptocurrencies or investing at all. This is just the opinion of an amateur, not a financial advisor. Before investing in cryptocurrency, I recommend talking to your financial advisor and doing your own research. But before we start, what is Polygon? Previously known as Matic Network, Polygon is a framework for building interconnected blockchain networks. It seeks to address some of Ethereum's major limitations, including its throughput, poor user experience, high speed and delayed transactions, and lack of community governance, using a modeled sidechain solution. Rather than being a simple scaling solution like its predecessor, Matic Network, which uses a technology known as Plasma to process transactions off-chain before finalizing them on the Ethereum main chain, Polygon is designed to be an entire platform designed for launching interoperable blockchains. Through Polygon, developers can launch preset blockchain networks with attributes tailored to their needs. These can be further customized with a growing range of modules, which allow developers to create sovereign blockchains with more specific functionality. How does Polygon work? Polygon's architecture can be best defined as a four-layer system composed of the Ethereum layer, security layer, Polygon networks layer, and execution layer. The Ethereum layer is essentially a set of smart contracts which are implemented on Ethereum. These smart contracts handle things like transaction finality, staking, and communication between Ethereum and various Polygon chains. The security layer runs side by side with Ethereum and provides a validators as a service role, which allows chains to benefit from an additional layer of security. Both Ethereum and security layers are optional. Beyond this, there are two mandatory layers. First is the Polygon networks layer, which is the ecosystem of blockchain networks built on Polygon. Each of these has its own community and is responsible for handling local consensus and producing blocks. The second is the execution layer, which is Polygon's Ethereum Virtual Machine (EVM) implementation used for executing smart contracts. Chains launched on Polygon are capable of communicating both with one another and with the Ethereum main chain thanks to Polygon's arbitrary message passing capabilities. This will enable a variety of new use cases, such as interoperable decentralized applications, DApps, and the simple exchange of value between diverse platforms. Ethereum's Layer 2 solution, Polygon Matic, welcomes Aave and Zapper to boost DeFi activity. As the decentralized finance ecosystem, popular as DeFi, continues to grow at a winged pace, Ethereum gas costs are surging through the roof, forcing investors to look for new, faster, and cheaper blockchains. Polygon, an Ethereum Layer 2 solutions, is emerging as the preferred solution as two major DeFi platforms, Aave and Zapper, joined the platform on Wednesday. Decentralized lending firm Aave, down 2.34%, will integrate scalable sidechains with Polygon, formerly Matic Network, to address the rising congestion and high gas fees experienced on Ethereum. The team plans to integrate a soon-to-be-released smart contract allowing users to seamlessly port assets across blockchains. High transaction fees are a feature of a successful blockchain, as they define actors ready to pay the market price to use and secure decentralized services, says Stani Kulachov, Aave founder. The DeFi field in the past has favored those with thousands of dollars to invest while effectively locking out the small spenders. In a blog post on the Aave Medium page, Kulachov states the recent integration with Polygon will bring inclusivity in the DeFi space, allowing investors with only hundreds of dollars to participate as well. That being said, DeFi was always intended to create a sustainable and more inclusive alternative to traditional finance, he added. If DeFi is great but only limited to portfolios of 5 figures and up, DeFi will be falling short of its mission to finance for everyone. At launch, Aave will introduce 7 assets available for lending and borrowing on the platform. Zapper, portfolio management and batch transaction network, is also joining the Polygon network, a statement confirmed on Wednesday. Polygon will be the first in line with Ethereum scalability solutions, with plans to integrate Optimism, Binance Smart Chain, and Arbitrum on the way. With Polygon's integration, Zapper will enable Ethereum to Polygon transfers, allowing cross-chain Zap transfers, its term for multi-transaction single-click deposits and withdrawals. The new partnership will also enhance sending funds from Aave to Polygon. Earlier in February, Matic Network rebranded to Polygon to enable Ethereum to compete with its rivals such as Polkadot. The sidechain scalability solution enables significant throughput increase while reducing the fees incurred on Ethereum transactions. Alright, so now let's get to the price prediction. The Matic price is in a consolidation pattern with no inherent bias. Hence, a breakout from this phase could push the token's price in either direction. Matic price awaits a breakout. The Matic price slid into consolidation, creating lower highs and higher lows due to aggressive yet diminishing pressure from both buyers and sellers. By connecting the swing highs and lows using trend lines, a symmetrical triangle pattern forms. The technical formation forecasts a 40% breakout, which is the distance between the swing high and low created on March 11th and 12th. Since this setup has no bias, a decisive close above 38 cents will result in a 40% bull run to 54 cents. On the other hand, a breakout of the lower trend line at 31 cents will kickstart a downward trend to 19 cents. An increased seller activity at the current price will likely push Polygon toward the lower trend line. However, a breakout here will spell trouble for the Matic price. A 13% drop to the immediate demand barrier at 27 cents coinciding with the 200 SMA on the 6-hour chart seems likely. If this level is pierced by overwhelming selling pressure, Polygon could indeed slide 30% to tap the intended target at 19 cents. Adding credence to the bearish outlook is a slew of underwater investors, as seen in Into the Blocks in Out of the Money Around Price IOMAP model. IOMAP reveals that 13,200 addresses that hold nearly 800 million Matic tokens are out of the money and might break even, dampening the bullish momentum. Additionally, the number of whales holding between 100,000 to a million Matic tokens has reduced by 8.5%, from 979 to 118. Following a similar trend are the investors that hold a million to 10 million Matic tokens. These market participants have cut down their exposure to Matic tokens by 13.5% since March 11th. Such a drastic reduction suggests that the whales aren't optimistic about the Matic price's bullish potential. While the downward breakout seems set in stone, it could be altered by a strong surge in buyers or new capital flowing into the Matic markets. If this momentum manages to push the price past the 40-cent supply barrier and create a higher high around 45 cents, it will invalidate the bearish outlook. In fact, such a move might catalyze a run up to 54 cents. We really hope this video was interesting to watch and gave you some info about this topic. Thanks for watching.